Here's a number that may not shock you, but between quarter two of 2022 and quarter two of 2025, home prices have gone up by nearly 20%. Yep, it's that time. It's the end of quarter two, and I want to break down all of the real estate data for Madison, Wisconsin. My name is Mark Gladue, and I'm a broker associate with Lauer Realty Group. For over 20 years, I have been helping people relocate to the Madison area. Whether it's my past clients who are looking to sell their current home because they're downsizing or moving up to their dream home, first-time home buyers who are moving to the Madison area, or maybe you're relocating for a job. I have been helping people navigate the waters of the Madison, Wisconsin real estate market for these 20 years. It is my passion, and it is something that I absolutely love doing. What's been happening in the real estate market numbers-wise, also what's currently trending, and then what's actually happening in the Madison area, because after all, you're not just looking for numbers, you're looking for what's happening, what's going to happen, and what's a good time right here. So let's break it down by the 7 most important numbers. So we're looking at numbers between April and June of 2025. In those months, we saw 755 sales. We saw 796 new listings. Now, if you compare that to 2024, not very different. We actually saw only 30 more sales in 2024. We actually saw 10 fewer listings. So if you can imagine, we're up by those 10 listings, but still not a lot of sales for the size of Madison. Then we move on to days on market. So we like to look at both median and average. So the median remains at 6. The average has ticked up a little bit to 18. So that means we're starting to see a little bit of a shift, but also quarter two starts with some summer months, and we start to see a little bit of slowdown in those summer months. So that's why you see 18 days on market average and 6 days on market median. The next 2 numbers to follow would be the average sales price in Madison and the median sales price in Madison. We're looking at $576,000 being the average home price in Madison, and then $489,000 being the median. Now again, better to follow that average, because if you're looking for a home in Madison, you want to make sure you're taking that average number, because that's the average number people are paying, right? The median is smack dab in the middle. So maybe first-time home buyers, if you're looking, you're probably looking at something below that $489,000. However, that's going to be the median home price. So anything below $500,000 is still going to be in heavy competition. All right, the next number we look at is list to sale price. So what is the average number above or below? Well, guess what? We're still sitting above. It's 102% of the list price. So that means on average in Madison, homes are selling for 2% more than they are listed at. Now, if you look at 2024, that was actually 104%. And if we jump all the way back to 2022 as a 3-year reference point, they were selling at 106% of list price. So that's gone down a little bit, but you can see that we're still seeing the average home selling for 2% more than the list price. Okay, the final number is absorption rate. And I want to preface this with something that you may have heard nationally, and I want to debunk this myth. So you're hearing a lot of people saying, oh, there are 500,000 more home sellers than there are home buyers. And while that may be true on the coasts and nationally, it is not true in the Midwest. I've talked to agents in Illinois and Iowa, other agents throughout the state here in Wisconsin, and we are still in a very strong seller's market. So absorption rate is, if we listed no more homes, how long would it take to sell? All of the homes that are currently on the market, and that is still below 2%. Or 2 months, I should say. Sorry about that. 2 months. So whenever you see the market hit 5 months or above, you're starting to go into a buyer's market, but anything below 5 months is still a seller's market. So you can see the only price point that we see above that 2-month absorption rate right now are $750,000 to $1 million. So still a strong seller's market. What I also find really interesting is how the price points break down. And really what I like to do is go from homes that go up to $400,000 and then go $400,000 to $600,000 and then go $600,000 to $1 million and then above $1 million. This will help you as a buyer determine where the most competitive offers might be right now as far as price goes. So if we look at homes that are priced up to $400,000, only 144 sales. That's the third in this ranking. Second highest would be homes between $600,000 and $1 million. There were 169 sales. And then the largest percentage of homes that sold were actually between $400,000 and $600,000, 395 home sales. If we're breaking down the market and trying to show you where the most popular home prices are right now, it's going to be between that 400 and 600. Okay, just for context, I want to give you what was happening in 2022. And I know this was kind of the height of the pandemic market, if you will, but there were over 1,000 new listings in quarter two in 2022. There were almost 950 sales in quarter two. And the average home price was $471 back then. So if you look at today, it's $576,000. That home price has gone up exponentially. However, days on market hasn't really changed, but the number of listings and the number of sales have. 3% lockdown. That's what this is attributed to. So when we see these rates come down, like I said, to somewhere below 6%, we might start to see all of the people who are in this 3% lockdown effect start to come out and sell their homes. It wouldn't be a market update unless we started to talk about interest rates, which seems to be the talk of the town, because guess what? If interest rates go down to 5.5%, then this market will blow up. If they stay right where they are, then we will stay right where we're at, which is still a seller's market, low inventory, however, still a good number of serious buyers. Once we go down to 5.5%, all of those people who were stuck in their 3% mortgages and didn't want to pay twice as much are now seeing a little more incentive to buy the next home because they're bursting out of the seams, they're getting a divorce, they're getting another job, they're being relocated. All of those things start to then come into play, and more people will hit the market if it reaches 5.5%. Again, I'm not saying it will. I don't have a crystal ball right now. We're sitting somewhere between 6.5% and 6.8%. Now, what is this predicated on? The 10-year Treasury yield. I know we've talked about this before. 10-year Treasury bonds are a benchmark for long-term interest rates, and that's because the average duration, the maturity, is the average duration of your mortgage. So mortgage-backed securities and Treasury notes are something that investors compete for. Fixed rate mortgages are riskier than Treasury bonds, and to compensate investors for this risk, mortgage rates are on average 2% higher than that Treasury yield. So when the 10-year Treasury yield goes up, it indicates a higher cost of borrowing. So if you're like me, and I'm kind of that nerd who puts it up on the screen, whatever financial institution you want to will be able to show you what's going on with that 10-year Treasury yield, and you want to follow that closely because once it starts to dip down to the low 4s or the high 3s, that means that we're probably going to see interest rates dip down to around 6%. It's not all predicated on the Feds. Again, it's predicated on a number of different things. Inflation, jobs growth, all of those things. However, the 10-year Treasury yield seems to be exactly the path that the mortgage interest rates are following. All right, now to see what's been trending in the second quarter and what I think is going to happen in the third quarter. So the first thing you see is homes have been sitting on the market for just a little bit longer. And I think the reason this makes everyone nervous and makes people feel like the market is starting to crash or, whatever it might be doing, that's because homes used to sell in 3 to 4 days. And that's just not happening right now. So when you see the average days on market tick up or the median days on market start to tick up a little bit, it starts to concern the seller. And they're starting to wonder, oh my gosh, am I going to be able to sell my home? A couple things to understand here with trends as it goes second to third quarter, and that is, if you think about it, most of the people who are moving because they're relocating for a job, or because families getting bigger, or school districts need to change, or whatever the circumstance might be, they're looking to move, they're planning that move, and they're planning to do it somewhere around the beginning to the middle of the second quarter. So if you have all of these things in place, school districts, family, trying to get everybody situated prior to the next school year, chances are you're starting to look in May and June to close in June, July, so that you can be all set when it comes time to start all of that transitioning. So when we go to the third quarter, you're going to start to see some of those larger homes out in the suburban areas take a little bit longer to sell. It doesn't mean they're not going to sell if they're priced right and they look great. It just means that it might take a little bit longer. There will always be serious people coming in and out of Madison who are looking to buy or sell homes. July and August have always historically been those months where it takes a little bit longer for homes to sell. I'm not saying every single home. What I'm saying, the homes that are in awesome neighborhoods, under 600,000, and are ready to go, meaning they're absolutely beautiful. nothing to be done, you're still going to be seeing 5 to 6 offers. The reason I know this is because I'm dealing with buyers right now who are going through the process, and we are seeing in very popular neighborhoods in the Madison area, as well as under 600,000 and move-in ready, there could be anywhere between 5 to 10 offers on these homes. The larger homes, maybe some of the homes that aren't quite as spiffed up, ready to go, as nice, those homes are taking a little bit longer to sell. And I've been following this over the last 2 weeks, and on average, we're seeing about 200 to 225 homes on the market active, which is extremely low if you know that Madison is about 350 to 400,000 people. So get this, of those 200 homes, or 225, 80 to 90 of those homes have been sitting on the market for more than 30 days. We're not used to seeing this. So those other homes are selling fast for the reasons I've explained before, but these homes are sitting on the market for a little bit longer. What does that do for you? Well, it doesn't mean that you can just go out and lowball. What it means is that you create this plan, you go in with eyes wide open, knowing that there could be opportunity with these homes that have been on the market for more than 30 days. So if I'm future casting here, which I am, and again, I don't have a crystal ball, I don't have all the answers, but I want to try to help you, and that is that in the third quarter, we're going to start pricing based off the most recent sales in your neighborhood. So if you are looking to sell, if you need to sell, then what I'm doing is basing my comps off the last 2 to 3 months of sales as opposed to the last 6 months. And that's because we know that the market shifted just a little bit, and so pricing has to shift that same way. The buyer is the one who dictates the market. So in this supply and demand situation, we still have a lot of demand, very little supply. However, the buyer's only willing to pay what the buyer's willing to pay, which leads me to my next market trend, which is most people, not everyone, most people are looking for move-in ready right now. And that's because with tariffs, with the economy, with the time it takes to get a contractor in the home, they're nervous. They're worried about if they're going to be able to get everything done by, let's say, the first holiday they want to celebrate with their family, or the first milestone they want to celebrate with friends, whatever it might be. People are looking for that move-in ready home. So as a seller, if you're thinking about selling between, say, July and October, you want to make sure that your home stands out above the rest. That's the market update for quarter 2, 2025 right here in Madison, Wisconsin. I hope it helps. We went over how many sales, how many new listings, what the list to sale price ratio is, along with the average home price, the median home price, and the absorption rate. All of these numbers are here to help you better create that plan if you're looking to either sell or purchase a home here in Madison, Wisconsin. If this information has been useful, I would love if you would hit that bell and subscribe, give us a like, make some comments. If there's a specific neighborhood that you're interested in finding out more about for quarter 2, for example, I live in Monona, and I know all of the numbers that there are to know about Monona, but if you live in University Heights, Nakoma, Ekin, or Eakin Park, could somebody in the comments below do this for me? Is it Ekin or Eakin Park? Keep having this battle. I just sold a home over on Moreland, and I'm still in my head thinking Ekin or Eakin. I always say Eakin. Could be Ekin. I don't know. Anyways, if you have a specific neighborhood that you live in and you would like to know the numbers for quarter 2, I'd be more than happy to reach out with those. As always, we appreciate your time. Thanks so much. I'm glad you stopped by.